You're listening to Two Girls, One Mic
Get smart about your money.
with the Shift Control session brought to you by moneysmart.co.za.
Shift financial control back to you.
And as promised, we're here with Raul from Money Smart to talk to us about why it's important to invest in our 20s, which Carmen and I are about to leave. So we're already on the back foot here.
Exactly. Hi, Roll.
Hi, ladies. Thanks
How you
for having
doing?
me.
Let's get him.
Ooh, your mic too. Nice. There we go. Okay.
That better. Over there?
There
How's
we
it?
go.
Okay, good stuff.
This is Raul. So tell us who you are, first of all, Raul. Why
Yes.
should people believe you?
My name is Raul George, and I'm a financial planner with PSG Consult. Toby Van Sale from Money Smart asked me to come and have a chat to you guys regarding investing in your 20s, and I'm also going to be writing a few articles for their website.
Okay,
The
so you're going
first
to be
of
out the
which-
community.
Exactly, yeah. The first of which is going to be published today.
Oh, really?
Yeah.
Oh.
Welcome to the fold.
Yes, we also
Great,
write.
thanks.
We write our humoristic lifestyle pieces on money. So we don't, have any intelligent things to say like you do. First, most important, why do we need to start thinking about money in our 20s?
Okay, there's a long list of reasons why a person could start investing early in life, in your 20s. But I've broken it down to four main reasons, being, first of all, to create wealth. Because by making saving a habit, you make creating wealth a habit. That then leads to point number 2, which is financial independence. By saving on a regular basis, you can become financially independent from your family, friends, and loved ones. And you can also avoid having to borrow money from financial institutions if you're in a tight spot.
I see. But it's so difficult. It's so difficult when you're like, well, I've got an extra 1,000 rand this month. Maybe I'll just buy those shoes. Yeah. That's where I was going with it too. Especially girls. I actually recently wrote a column that hasn't been published yet about the she-economics, the female mentality of how a man will take care of us one day. And it's this archaic thing, but it's kind of ingrained in us.
It's a
and
strange
why, especially
phenomenon.
for women, is it sort of important?
It might not always work out, though, that whole
Well,
belief that a man will come and save you.
Exactly, and it's this terrible, because, a lot of my guy friends in our 20s, because Carmen and I are both 29, there's no shame, we both had our birthdays on air, and a lot of my guy friends in our age group will tell me how they're getting pension plans and they're planning ahead, but I haven't had that conversation with a single female, so I haven't started planning at all. I don't even have health insurance.
Or is it just that women don't really chat about money issues? We're kind of like, ooh, let's order more cocktails or whatever. It's never about, so have you thought about your life
money,
insurance? Exactly.
money.
But it's a lot more important nowadays for women to be looking at the planning themselves as well, because women are more empowered nowadays. It isn't the old way of financial planning where the financial planner would come and have a meeting with the client and sit and chat to the husband with the wife in the kitchen.
Yes, well, my
that's
mom
true.
was telling me when I was a kid, my father had to approve all the checks she signed. She wasn't allowed to sign a check as a female. It's crazy. And now they make power suits with stilettos. So
Exactly, you
times
guys can
have
look good in the
changed.
workplace. Yeah.
Business Barbie.
But, okay, so how can one go about? What's the smartest way to start investing?
Okay, if you want to compare bank accounts with other type of different products on the market that you can look at, the main two products that spring to mind are unit trust investments, pure unit trust investments, and endowments. Now, endowments are very rigid products because you're basically undertaking a contract with an insurance or investment company where you agree to pay a monthly amount or a lump sum amount to them for a certain term. So let's make
So would that be with, for
5 years.
example, Alan Gray or something?
Yeah,
do they
Alan
do
Gray,
that?
Sanlam, Old Mutual, most of the big insurance and investment companies have that on offer. And then it's very rigid, so it gets, at the end of the 5-year term, you can withdraw the funds, but if you want to withdraw the funds before the end of that term, the full fund value, then you normally pay steep penalties.
Oh, so they want to keep
Yeah.
it for long, so they can play with your money.
Exactly. The payout that you get at the end of that 5-year term, or whatever the term may be, is it's a tax-free payout, but that's because the product gets taxed at a fixed rate of 30% during the term. So if you're not on a 30% tax bracket or higher, it's not really advisable. You understand?
Okay.
Okay, so then we get to the next product, which is the pure investment route, the pure unit trust investment route. And this is basically a product where investors pool their money together. It's a much more flexible option, and you get taxed at your tax bracket, your marginal rate.
Okay.
So let's say you're on an 18% tax bracket. It gets taxed on 18% and not on the 30% like in the endowment.
So if we said to you, Raul, I've got extra 5,000 rand and I want to invest it, what would you say? Where do you go? Say, Angel, go here. What's the best advice?
I would first ask 2 questions. It's the same questions I ask all people that come to me wanting to invest. It's what is the purpose of the investment and what is the time frame of the investment.
So that I'm not broke when I'm a granny.
Exactly.
Simply put.
Because that way you can make sure that you invest in the right products for the right reasons.
Yeah, so it would be long-term. Do you
Short-term,
recommend
whatever the
long-term
case.
for 20-somethings or what?
It depends on what you're looking to invest for. I mean, say for instance, you want to invest for a deposit on a house. I mean, that's going to be a bigger chunk of change that you're going to need. So it's going to be a bit longer term. Whereas if you want to invest for a holiday that you want to go on 3-4 years from now, that's more of a short-term investment.
Okay.
Yeah, that's like guys, you know, the long-term investment goals and the short-term investment goals. A lot of my guy friends, you know, you got to put in a lot of work with the girl, but she's going to get hotter one day, so she's a long-term investment.
Is this the whole meet the mom thing?
Yeah, and you got to text her every now and again. She's a long-term. And the hot girls who have no personality, she's short-term investment. Instant payout.
Makes sense.
So let's play a song before I carry on with my analogies.
We're going to play Eminem Business.
Thank you for coming. Your host for the
Eminem Business time.
And we're chatting to Raul in our Money Smart Shift Control session.
Yes, and Raul is a very smart investment man, basically. That's all you need to know. There's lots of statistics and credentials, but basics, he's smarter than us and he knows it.
And we're not going to be poor grannies if we listen to Raul.
No.
Let's go back here.
So, I mean, we've been talking about why it's important to invest in your 20s, and these are the things that we always don't want to talk about, money, like hide away. I go through phases where I don't even look at my bank slip when I go draw money from the ATM. I don't want to know. I'm like, don't tell me. Just give me the cash. Let's avoid all this confrontation.
By the end of the month, it hurts.
Yeah. I'm trading water this month. I'm okay.
I think everyone is, though.
Are there any other things that you think is important for people to take away? I mean, you obviously can't do an endorsement. What company are you sort of affiliated with?
I'm affiliated with PSG Consult, and it's basically a financial advisory brokerage company. So we registered across the board with the Allen Greys, the Sanlums, the Old Mutuals.
Oh, so you don't have a favorite, you know, like you don't have, Allen Gray paid us, so we put all our people through to them.
Exactly. We don't have to endorse anybody specifically.
That's
We're
good.
independent financial advisors.
So those are the right kind of, so you will give us the right advice.
The best product on the market to suit your needs. That's the idea.
Okay, and to suit a freelancer like Harmony or myself, what would you recommend off the top of your head?
It depends what you want to do. If you want to invest for the short term, medium term, or long term.
Well, what's going to make me the most money? The long term?
Because that's what I'm
Long
thinking.
term.
I often think that investment is cool, but then I'm thinking stock options are probably slightly better, a bit more risky, but...
Yeah, there's more risk involved because you limited to that one share that you're buying into. So in the event of something bad happening to that company, your share price could drop, and so can the fund value.
I read a tweet the other day about the guy from the 70s, or I don't know, who sold his Apple share. He had 10% stock in Apple, and he sold it for like $750 or something, and now it's worth
Kicking
like
himself now.
200 billion or something disgusting.
Yeah.
My housemate actually tweeted and he said, if you think you're having a bad day, think how this guy feels.
Shame. Well, I mean, what you were talking about earlier with the unit trust. So that's a whole... Well, tell us, what are unit trusts?
Yeah, instead of investing, say for instance, in a direct share, you can go the pure unit trust route. And by investing in a direct unit trust like that, you get exposure to the 4 different asset classes instead of just that one share. So by the 4 different asset classes, I mean cash, bonds, property, and equity, or also known as shares. You understand? So there you get that share portion which can give you that growth. And the way it works is, as I mentioned, in terms of the short, medium, and long term, is you decide kind of what's the purpose of the investment, how long do I want to save towards this, and then you go and choose a fund accordingly. So with the different types of unit trusts, you get different risk profiles for the unit trusts. And the main risk profiles are conservative, moderate, and aggressive. And you can split that up into time frames.
So aggressive is more dangerous, but you're more likely to make more.
Exactly, but then it's a longer time frame. If you want to invest aggressively, it's not going to be the smartest option to invest for a year or so.
I immediately don't want to do anything conservative because it makes me think of Americans who support Bush. So I'm just like, no, not conservative. Let me be aggressive.
I gotta make money, which is not
Like
happening
shoot
on the
rainbows.
conservative.
Yeah.
So there's nothing wrong with going aggressive though over the longer term, because then your money basically works for you because you earn compound interest. It makes your money earns interest on the interest that is already earned.
That does sound. That
It does
sounds like
sound
what
smart.
I'm more interested in. Interest.
Yeah.
So,
Well.
yeah, and your article's coming out on moneysmart.co.za
Yes,
today.
it was published today already.
We'll find that and we'll tweet that link out
We
for
will.
you guys
Great,
as well.
thanks.
Well, thank you, Raul.
Yeah.
My pleasure. Thanks for having me.
Yeah.
And this was your Money Smart Shift Control session.
Yeah.
Join us every Friday between 1 and 3 p.m. for the Money Smart Shift Control session.
Budget, save, and invest with moneysmart.co.za.
The free online personal finance platform that helps you stay organized with all your money in one place.
Shift financial control back to you.